financing your next billion. Gain insights into successful engagements with venture capitalists and investors. Get ahead of industry trends, hear from industry leaders, influencers, founders, policymakers, and governments. Stay in the know on how to finance your next billion.
Welcome again to Financing Your Next Billion. And today we're going to be talking about the capital guarantee. Actually, this is series 1 of an 8-part series on capital guarantee. And we're going to go in depth and tell you just what the capital guarantee is, what it does for you, how you can obtain one, and why you might need one. So I am Yvonne Gamble. I'm here with my co-host with Jerome Curry. Jerome, what's going on in your world?
Good day, Yvonne. How are you today? I tell you, Yvonne, it is a great day. We're definitely seeing some motion in the nation, definitely seeing some motion around the world. And so I feel very optimistic. Things are turning around for a lot of people, and certainly excited to hop into this topic today and really provide some value and really look at what we can do to continue to add value to you, our listeners, and so appreciative and so thankful for your support.
Okay, excellent. Well, just to kind of start us off, Jerome, why don't you tell the people what, just kind of give us that 10,000 foot look at what is a capital guarantee? I mean, what is it? We hear that term thrown around in the VC community and the commercial lending, and they say capital guarantee, bank guarantee, standby letters of credit. What is that?
Absolutely. Well, the capital guarantee is very simply a method or a institution or a supporter that simply agrees to back or support your your project idea or concept. And so very simply, it's an institution, a person, a company or group or contractor that decides to help you by mitigating some of the risk for your project. And they do that in terms of guaranteeing a portion of your particular project. And that's very simply what it is. It's basically where you have someone or institution that's going to guarantee that portion of the project.
Okay. Now we kind of titled this, how deep is your balance sheet? So what happens many times, we'll see a founder will come and they've got a basic balance sheet, or maybe they've only been in business 1 or 2 years, and some of them are in upstart, or they could have been in business for 4 or 5 years or 10 years, but the balance sheet isn't looking, so good, or, it's really not going to take that project. So how then, what happens? How would they obtain a capital guarantee if their balance sheet, isn't looking all that favorable?
Absolutely. That is an excellent question. And one of the things that you want to take a look at in uh, obtaining a capital guarantee or getting depth to your balance sheet, you want to take a look at what do you have in your possession right now. So what is your project or your concept or your idea? And the question that you want to ask is my idea, concept, or project, is it bankable? Is it something that despite not having a balance sheet, is it something that could be bankable? Let me give you an example. Let's say, for example, if you're looking at a solar project and there's a bid out for solar panels, and you have a new idea that's going to be able to innovate solar panels and or be able to produce more solar panels in a particular time. Well, you have a very bankable idea. So even though that you don't have the balance sheet necessarily in place, you have an idea that can be bankable. So what you want to do is take a look at, how bankable is my idea when looking at your balance sheet? Now, that's one of the first places you can ask. The next thing you want to take a look at in understanding how to obtain a capital guarantee is really understand who or what issue, who or what company or what institutions issues a capital guarantee. And then that kind of leads us into the next place of where we want to go and talk about what's a sponsor. And Yvonne, maybe you can just share a little bit more on that subject, and then take a look at how it can be moved forward from there.
Okay. Well, yeah, that's that frames it up very, very nicely, very nicely. And in kind of piggybacking on what Jerome was talking about, when you look at that, who might be able to issue that to me. And with the different sponsors, I'll just give you a bird's eye view of them. Sponsors could be the OEM, the original equipment manufacturer. So if you're reselling equipment or what have you, that person's equipment, any part of that, when you're creating a product, even a service, that product or service demands what? It demands some pieces or some parts that you don't have, that you have to go to someone else to get. Well, they would be, if you had Intel, if you're putting together, say, a computer, and you have that Intel chip inside of it, Intel would be happy to be a sponsor, because what's going to happen? They know that you're going to keep buying from them these parts to put together your computer that you're going to sell to your clients. So they know that's a guaranteed, you then become literally a guaranteed customer of their product. So they have guaranteed sales. People like that are excellent to become sponsors for you. Now, what we're going to do is, there's several types. That's just one look at them. But we're going to take a break. It's time for us to take a commercial break. Yellow lights flashing again on us, and we have to pay for all of this. So we're going to hear from one of our sponsors. And when we come back, we're going to go a little bit more. We're going to take a deep dive and look at sponsors, and just how the types of things you would need to do to actually engage with a sponsor. So stay tuned, come back after the break, and let's take a deeper dive into the actual sponsors that are out there and available for you. Okay. All right. So thank you so much for coming back. If you're just joining us, you're joining Financing Your Next Billion Live, and you're here with Yvonne Gamble and Jerome Curry. And we're discussing today the topic of the capital guarantee. And this is the first in a series of 8, where we're actually going to be really breaking down the entire topic of capital guarantees. And we're back. And now we're going to be talking about the different types of sponsors that you may actually be out there who are available to you. We talked about one type of sponsor, the OEM sponsor, before the break. And we're going to start off and let Jerome come in and give us some of the other types of sponsors that might be available and how you might want to engage with them.
Absolutely. So one of the other types of sponsors is the private investor. Now, the private investor could be a family office. It could be a high net worth individual. It could be an angel investor. So it could be a private investor, could be a range of different investors that would agree to sign on and be a capital guarantor for your project. Now, the question becomes, well, how do I attract those types of investors? Well, if you looked at any of our previous series, we talked about how to structure your pitch deck, how to structure your business plan, so that it's attractive to the investors that it wants to. If you think about it like this, honey attracts bees, and bees like honey. So you want to find out what investors like your type of project or your type of idea. The next type of sponsor that you could take a look at is the government. So the government will actually look at particular projects that they will actually guarantee. So what's an example of this? Let's say, for example, if there's a housing development, or let's say, for example, there's a IT software process that could help the community. These are cases where the government may agree to guarantee or come on as a guarantor for your project. Again, the question comes up, how do I engage the government? Well, that's a whole, that's an entire lesson and process that we'll kind of go through. But just to kind of give you a flavor, one of the things that you want to do is be aware, again, of what does the government want? What's in the government's best interest? And does my project or does my idea align up with those concepts that the government is looking to provide? Yvonne, any other sponsors you can think of by chance?
Yes, and this comes to us a lot of times. Nonprofit organizations. Nonprofit organizations are excellent. NGOs, now, non-governmental organizations, outside of the actual government can sponsor or otherwise support projects as long as it aligns with the mission, that they have. So these are very good places to go to look for sponsorship. The United Nations sponsors so many different projects, and if you go to the United Nations, go out to their website, look up your particular type of project, put that in the search, and then you'll see who in your area or your target area is doing different types of projects. Because what you want to do when you're thinking about someone coming in as a sponsor, don't just simply think about, oh, I'm trying to do a $20 million project, so I'm looking for one $20 million sponsor. Look at how many people that you can actually get. As a matter of fact, a good base number is a base number of 10. Look at 10 different sponsors. Now, that doesn't mean 10 different financial sponsors. Some sponsors you want to have are marketing sponsors, people who actually market your product, people who support your product with data, people who support your product with actual potential customers or clients to come in and use your products. So when you start thinking about sponsorships and looking at those 10 different people or 10 different organizations that I might get to sponsor my project, you want to look at every part in your project, in your process line of what your process has to do, how you manufacture that process, how you distribute that process, how you market that process out to the public, and get a sponsor every step of the way. And if you begin to break it down like that and you begin to look for that, it makes it much easier. And oftentimes, these people can actually send you to that someone else who may be able to give you that financial capital guarantee that you're looking for. Other financial institutions that you want to look at, the World Bank, they provide, just a plethora of different types of multilateral where, it kind of goes across the board of who may sponsor into the different types of projects that you're working on or the different type of service that you're providing. And most of the times when you engage these people, what you want to do is, like Jerome said, you want to make certain that your cauldron of value, you want to know all the different values that you have, not just your value to the client, not just your value to who you're trying to sell the project to, but the value that you have to another company, even a competitive company. So we'll get into that in another video. So I want to talk to you a little bit. I want to go about the sponsor's contribution. And why would a sponsor, because that's going to be a big issue with anything. When we start talking about you looking at the value that you have, you want to look at your contribution and what is that sponsor going to want. So what are you going to give them in exchange for sponsoring you? A sponsor's, their main, contribution is going to be that capital guarantee. or a partially, leverage guarantee. In exchange, they may want a modest equity stake in there, depending on what you're actually providing, or they may want to have you to actually promote their product and their services, to simply say that your product is built with their pieces, with their equipment, with their components, these types of things. That goes a long way. That goes very far, because what happens with that? That for them is basically advertising that they don't have to do. And that also advertises that their product and how many people are using their product. So when you think about those types of things, there are many different ways to accomplish the goals that you're trying to reach. And the more people that you can involve with this, get that base of 10, those 10 sponsors that actually track along that whole lifeline from the conception of your product to the actual end user actually utilizing your product. Who and where are all the places that this stops along the way? Those people are potential sponsors for you.
Absolutely.
Anything that you want to add to that, Jerome?
Absolutely. One of the things that really struck me as you were talking, I just want to piggyback on it. When you understand the sponsors, that understand your values, but also understand the sponsors' values. In addition to that, one of the things that we've really seen in the marketplace is that a sponsor will not only have a financial objective or financial value that they want to achieve, of course. However, one of the things we're really seeing is that there's also a philanthropic value that sponsors are wanting to see. Does your project impact the community? Does it uplift the standard of a nation? Is it providing sustainable housing? Is it providing renewable energy? Is it providing? Is what value is your project? Is your concept? Is your idea providing to the actual public? Now, it could be to a business space where it's going to provide more value to a business. However, I want, as you start to look at your idea and your concept, you really want to ask the question, what other impact can my concept or idea have on the general public? The reason why you want to ask that question and dive in kind of deep is because sponsors are also looking for those projects that have that philanthropic viewpoint and philanthropic stand. And when you're able to marry both your values and uplifting the standard of the community, and also have a solid financial value statement and solid financial goals and solid financials in place, then your idea becomes so much more likely to get picked up, and it becomes easier to then target and locate the sponsors that you're looking for. And that's yeah, and that really is key. Really looking at those sponsors that fit what you want to do, and that's something that they're looking. One of the things that when we talk about the next subject, the sponsors, what are they looking to contribute? Well, of course, the capital, and also as well, they're looking to make a contribution. Normally, in these cases, to the society in some form or facet. And Yvonne, maybe you can talk a little bit more about that as we kind of dive into that next topic.
Okay. And we definitely will. We're going to take a 30-second break, and we're going to come back and we're going to talk about that a little more. And we're also going to talk about, as we, come to the end of this particular show in the series, and that is we're going to talk about how do sponsors and a capital guarantee, how you can mitigate that risk. And that those two topics actually, they might not sound like it, but they do go hand in hand. So come back after the break and we'll take a look at how sponsors and a capital guarantee can mitigate the risk of an investor. So we'll take a 30-second break. Okay. And so I've got several commercials that I'm putting together so that we can, put our commercials, right inside of our show.
Okay. Excellent.
Yeah. So, those that fit that 30-second, 60-second time frame. Mhm.
Excellent, excellent, excellent.
I love that. That looks very good. What you sent over, that startup, and the only thing I said in the startup, I said because it was just start you
Yep, I
profit.
had it. We updated it. Yep, we got that updated.
Okay, yeah, but it looked good. It looked really good. I like that. I like that.
I
So
said
yeah,
this
I'll
is.
use
I
that.
said
I'll
this is a
create
winner.
a commercial for that. Get an app. We got an app for that.
Absolutely. I said this is this. That's a winner. I said there's no. When I looked at the overall project and when I looked at everything, I mean, from the risk mitigation to being able to make money day one to all, I mean, there are no weak points in the presentation. I
Hmm.
mean, it's either, I mean, I mean, there's no weak points in it. I mean, it has a uniqueness. Nobody else is doing it like we're doing it. It has the money, it's not a philanthropic, purely, hey, purely philanthropic pool where, we're just kind of, we're in the grant line. I mean, it has, the presentation has no weak, there's no weak spots in it that you can just say, no. So I'm excited. I'm looking forward to, I looked up the people. I looked up I did a little research on the folks and, both of them recent college, most of them are recent college graduates. They
Oh
teach.
God.
One of them, she graduated. I think one of them graduated in 2015. Graduated from Duke. You know, graduated from Duke in 2015, 2015 or 2013. So and then the other girl, she I think she graduated in 2016, 2017, somewhere around there.
So don't make
So
any references past 2000. I swear. Don't make any references past any. This is how I have learned. I do the same thing. I do my research, and what I have learned to do, and that is I keep my references or my reference points relevant within the time frame of where the people you're talking to are.
Yep. Mm-hmm.
Because you go back too far, even with your different quotes and different things that you use, you're losing them.
Yep.
They have
Mm-hmm.
no conception, none
None.
whatsoever.
None.
What you're talking about, and who those people were. You start talking about the Temptations and stuff, and they looking like, who is that? That's who my
Absolutely.
great grandparents listened to. You know, in this day and age, because it's about every 15 years you got a different set of parents and grandparents. So
Oh, good. All right, so
yeah,
I'm ready. I'm ready.
okay. All righty then. So you want to count? You
Yep,
want
I'll
to
count it down.
count
I'll count it
me
down and start back.
in?
Yep, I'll log us in. Yep.
Okay. Well, thank you so much, and we're back after the break, and we're going to be talking about how do sponsors and a capital guarantee actually mitigate the risk. So, if you can, why don't you just take the helm, Jerome, and just start us off on this topic. With those who are joining us live, you're on financial um, education from Financing Your Next Billion, and we're live here. I'm Yvonne Gamble, and with my co-host Jerome Curry. And what we try to do is bring to you information that's going to help you in your capitalization in your search. So, because it's critically important that you understand not simply just that I need some money for my project or my service, but you want to understand the impact. And we talked about that in our last segment. So you want to take this information that we're giving you. This is evergreen, so it's always out here. You can always play this again and again, play the tape back, stop it, pause it, go forward with it, so that you really get an in-depth understanding. And you can always reach us at www.platformcapitalgroup.com or at www.sandpeakfinancialgroup.com. you can reach either one of us or one of our team members, and we'd be more than happy to talk to you about your project and any things that you in your capital raise and what you might need to do that. So, how do sponsors and a capital guarantee mitigate the risks of the investor, Jerome?
Absolutely. Well, when we talk about mitigating risk, let me just break down what that means. It simply means that you're spreading the risk out amongst the investors. So let's say, for example, if you were going to, let's say, for example, if you're going to the store and you said, you know what, I need to feed 10 of my kids. I need to feed 5 of my kids. And you said, you know what, I'm going to buy 1 or 2 bags of potato chips. Well, that might not work out because you got a lot of risk that the kids might eat up all of those potato chips. So I know Yvonne can agree. Your kids can eat a whole lot. So you may buy 5 or 6 or 7 bags of chips because they may eat more of those chips. Well, just like with projects, investors want to limit the amount of risk that they have to any individual project. So what that means is that getting a sponsor, what a sponsor does is it helps to mitigate the risk of your project by having a guarantee normally in the form of revenue or some type of financial backing for your project or your idea. So so that essentially is what risk mitigation is. And those sponsors, basically, they're bringing money to the table to help you mitigate the risk of your project or your idea or your concept. And then that allows other investors that gives other investors a good feeling about getting involved inside of your project and helps you to better the balance sheet of your project or your idea. Any thoughts on that? On that, Yaman, and that's what the capital guarantee does.
Okay, that's excellent. Yes, I do have a thought before we, wrap up this particular part of the segment, and that is you always have to be looking at how you can mitigate the investor's risk. It goes far beyond just simply saying this is the return on your investment that you're going to get. This is how much money 3x, 10x, 5x you're going to make. It goes beyond that because there's a risk factor. Many companies, the burn rate, and that's something that one of the series we have, and we'll be talking, specifically about that. And that's where you definitely want to make sure that that investor, his risk or her risk, has been mitigated in some kind of way. Because generally, when a project starts off, we'll estimate and we'll guesstimate, just how much it's going to cost. And when we get into that, it generally ends up costing us a little bit more than what we had originally anticipated, or we'll spend a lot more than what we had anticipated. So how then do we actually kind of stave off that risk? Because then the investor is going to be looking for benchmarks and milestones. And depending on if you're making those benchmarks or not making those different milestones that you have out there, having that capital guarantee, that gives them a bit of comfort level that, I'm not going to lose everything because that capital guarantee, and we'll talk about that in our next series on the capital guarantee explainer. We'll go in depth on that particular, that's our number 2 in the series. But what we'll be actually exploring, and that is that time frame that the capital guarantee is actually for. And we'll look at that a little bit more in depth and in detail. But the mitigation of the risk is that's one of the things that you really want to talk about right at the onset of those initial conversations and that relationship building time that you have with the investor. So really for this particular series, with this first one here, that really is what we're covering because basically what we were trying to do was just to look at, how deep is your balance sheet and where does it go? And I think we've covered that topic quite well. Did you have any parting thoughts that you might want to share with the people, Jerome, as we wrap up?
Sure. I would certainly say take the time to go through the material, take the time to go through the videos, take the time to go through all these things, and really understand. Take the time to really understand. Excuse me. Yeah, to retake that. One of my devices decided to go off. Okay, you'll have to really take the time to understand uh, what it is that you want to do with your company and your idea, and how all these tools and how all these resources, how they're going to help you, and how they're going to be able to come together and make a beautiful picture for your company. And as you do that, and as you continue to listen and continue to grow, you're going to hit the goals and objectives you set.
Okay. Well, thank you very much. And thank you for tuning in. And as always, we look for those who would like to come on the show and talk with us. And you can reach us at our different websites. You can contact us through our platform Capital Group or through Sanpete Financial Group. Thank you, and look forward to talking with you soon.
Financing your next $1 billion? Contact us to be a guest. Join us for the next show.